That was the International Morse Code Signal, the call for help, and that marks the beginning of my program, Gilbert Talks Taxes, because, Todd, as we all know, taxation with representation has not been such a good idea either. And this week we're seeing some stellar examples of where it has not been a very good idea. Good morning, everyone. My name is Gilbert Carmona. This is Gilbert Talks Taxes, and that was my laptop turning on. Todd, thank you. My engineer this morning is Todd. No, we are full of information this morning. We have really, if you're thinking about selling your house, there is a lot of rumors, and I call them rumors because maybe we should call them myths. A lot of myths about what to do with your gain, and is it taxable, is it not taxable? I'm going to hit 9. I've compiled a list of 9 rumors, myths, allegations that go around about what happens with the sale of a house. And really, I'm going to hit on the sale of any property. It's springtime. People are thinking about moving. They're thinking about selling their homes. They're thinking about doing lots of things. My name, again, is Gilbert Carmona. I am an enrolled agent. An enrolled agent is a person enrolled with the IRS, like a CPA and a tax attorney. Enrolled agents have authority to represent taxpayers in all kinds of matters, tax issues, appeals, and pretty much any problem you may have with the IRS, an enrolled agent can help you with. My office is right here at 113 Whitesides Road in Rutherfordton. I have another office in Polk County at 226 South Trade Street in the beautiful downtown Tryon area, the Art Deco building there. Now, if you have any problems, you've gotten a letter from the IRS you don't understand, or you just have a question, go ahead and call us here live at the studio. Actually, you can call my number, 828-289-9300, or you can go, if you got the internet handy, you can go to gilberttalkstaxes.com. There's a little questions, contact us section with the questions box. Fill it out and send me the question. I'll get it here. I will try to answer it. If not on the air in the next hour, I will get back to you this week. Those of you watching me live streaming, the new Blue Room meter is fabulous. Todd, you did a good job with that. It looks great, and my hair does look fabulous this morning. Those of you on www.wcab59.com can see us here. Actually, they can see me. How come they can't see you? We need to get a wider Blue Room cam. We don't have one that wide. We need to get a wider one to get Todd in there so you can see him. Actually, Todd is here live with me. Also, I am actually talking. There he is waving. I am actually talking to him. And those of you listening to us on the other side of the mountain, on Northland Cable Channel 5, good morning to you. I got a lot of emails, I got a lot of questions last week, and last week's program really stirred up a lot, and thank you all for listening. I think I've gotten back to everybody. I think I've answered all the questions. I'm not sure if I haven't. Please let me know. But so I'm going to talk this morning about if you sell your house, what is truth and what taxes you have. Before I get into that, though, this morning, I want to talk about H&R Block. I've talked in the past. I am a tax preparer, and we started this program 3 years ago during tax season to try to educate and answer questions. People had a lot of questions, and a lot of people wanted to know who I was and what I did and what an enrolled agent was. So I thought, this is a great way to communicate with the communities I service and answer their questions, and they can kind of get to meet me over the air. So I don't this isn't a 1-hour commercial for me, and those of you that have been listening know that. But I do advocate for the taxpayer, and what that means is I want to see the taxpayer get the best service available. So I've talked about scams, I've talked about bad tax preparers, I've talked about things to avoid, things not to do, things that will obviously get you at some point in trouble. And so I've talked about tax preparers now, and I've said this before, just because a person is a CPA does not mean they do taxation. Now, the AICPA, which is the association that all CPAs belong to. It's the national association, and you have the local association. CPAs are licensed at the state level, whereas an enrolled agent like myself, I'm licensed by the IRS. I answer to them. All my testing was through them, and everything I have to do, I only have to do with what we call OPR, the Office of Professional Regulation, and that's who I answer to. Okay, and if you got a complaint against me, that's who you complain to. You complain to the IRS directly. So I'm actually CPA eligible. I have 157 hours of college with about, I believe I have 62 hours in accounting and taxation. To be CPA eligible, you have to have 150 hours of college, which is a bachelor's degree and then some, and which I'm a double major, accounting and administration, and I have a minor, Todd, in computer science. That's why I admire your work there so much, because I really know the effort that went into that. So I'm CPA eligible. I did not become a CPA. I did not go that route because I want to practice in all 50 states and territories. I actually represent taxpayers all around the world. I have clients in Germany. I have clients in Brazil. I have clients in Mexico. I have a lot of clients in Mexico, and I have clients in 13 states and counting. I actually even have one that does business in Canada, though I really know very little about Canadian taxation. But my clients in Germany, I have to deal with the Burgermeister quite often. Yes, it's a real person, Todd. I know Todd laughs every time I say that word. It's a real person, and he's like their tax collector. And no German likes the Burgermeister, by the way. That's why all the Germans make jokes about it. It has nothing at all to do with that, Todd. And we've got for later, so you're okay. We'll be eating later. So H&R Block. So all that said, I became an enrolled agent for that purpose. I am an expert in taxation. That's all I do. Now I do accounting and I do financial planning, because ultimately any financial plan is a tax plan. And it shouldn't be that way, but it is that way. It's just the way the code is written, and it's the way it's going to happen. The hardest part about financial planning, when I'm talking to that wasn't correct English, when I'm speaking with a couple in their early 40s, and we're trying to do a tax plan, and they're looking at a retirement of 68, 69, 70 is what they're planning, their working life, and we're making these plans. Who knows what the tax code's going to be then? So we do a lot of contingent planning, and we do a lot of things, because again, any financial plan is a tax plan, and any tax plan is a financial plan. The two just go hand in hand. So that's what I wanted to do, and that's the direction I wanted to go in. Now, CPAs, and I've said this before, don't assume because a person's a CPA, they are a tax expert. As a matter of fact, I personally know CPAs that if you went up to them and asked them to do a tax return, they would duck and run. It's not what they do. They do business valuation. They do, a lot of them do audit work, but not audit work for the IRS, audit work for if somebody's going to sell their business, or if somebody has suspected fraud in the business, or somebody just wants their financials audited to make sure that their utilities are being paid, they're not overpaying utilities, which there's a client I have who owns multiple buildings in many states. His utility bill is in the millions. So there is actually a CPA whose job is to audit this man's electric bill, water bill, gas bill, and telephone bill. Because when you have employees with 50 or 60 cell phones, that's one big Verizon bill that you've got to go through every month and make sure that everything's being done right when you're paying that kind of money. Okay, so all that said is I've told people what to look for in a competent, reputable tax preparer in the past. I'm not going to go over that list right now. There's many things, and today you even have to look at your tax preparer and see what kind of security your tax preparer has in his office and on his internet, because of ID theft, which we all know is and I said it last year, my prediction for this year, one of my predictions was that the IRS's biggest problem was not going to be Obamacare. It was not going to be the tax gap, which is an imaginary number that they kind of throw around of how much tax they're not collecting. How come it's never the tax surplus? We have a tax surplus. We've over-collected $3 trillion, and we're just going to return it to the people. It's never that. It's always how much, or their budget problems. That's not going to be, and I said it last year, and I was right. It's not going to be any of that. The IRS's biggest problem is going to be, and is, and will continue to be, identity theft. And a lot of that identity theft is coming from tax preparers who either are having their information hacked or stolen, or in the sad case of a few unscrupulous souls, they were selling the information. So it's important. It's very important that you're aware of that. So H&R Block does a little commercial. Have you seen it, Todd? The H&R Block commercial? I saw it on the internet. I didn't. It's been a primetime commercial because this is the last 2 weeks of tax season. It's April 2nd today, and April 18th this year is the last day. It's not the 15th. 15th falls on a Friday, and this April 15th, this Friday, is Emancipation Day in Washington, D.C. It is a federal holiday in Washington, D.C. I think it's the only place it's a federal holiday, but because it's a federal holiday in Washington, D.C., the federal government will be shut down that day. So you have till law says if it's a holiday, the next day's a Saturday, next day's a Sunday. It's Monday the 18th this year. So we've got 16 days left, and people are calling. I got a phone call Friday. Yesterday, I got a phone call. It's April 1st. Taxes are due in 2 weeks. I said, come on down. I'll fix you right up. But a lot of that happens, and it is is probably the busiest time for most people. So H&R Block's running these ads, and in it, they said not all CPAs practice taxes. And the AICPA, it caused a firestorm with these guys. They shot back emails and a letter writing campaign that they want everybody to send this email and write this letter to the CEO of H&R Block and complain about this. And I got a huge problem with this because, number one, what H&R Block said is true. Many CPAs don't practice taxation, don't want to do taxation. Many of them will tell you, I don't even do my own taxes. I know one who's a CPA and a lawyer. And he asked me this a couple of years ago. He said, do you mind looking my tax return over? I'm not sure I did it right. Because that's not his specialty. He had some schedules in there that he wasn't sure, and he just did it. I think he used TurboTax. And he said, could you look this over? Something just doesn't seem right. I said, sure, no problem. I did it for free because you never know when I might have a legal question for him. But it caused a firestorm. They're mad. And another thing, the AICPA should realize there are a lot of CPAs that work for H&R Block. H&R Block just did this as a marketing thing. And then on the other hand, I don't think H&R Block did right either because they implied that you don't need to go to those CPAs. You can come to us. So I just thought that was interesting. End of tax season jitters, and there we have H&R Block and the AICPA going at it. And H&R Block is the nation's largest tax preparer. They are the largest. And it's the big three: H&R Block, Hewitt, Jackson, and Liberty. But and then you have everybody else, which is the rest of us. Let's take a break real quick. Going to come back. We're going to talk about one thing with Obamacare, and I promise it's just going to be one thing, because that's a 45-minute show right there. This is Gilbert Talks Taxes right here, WCAB 590 AM.
A good sign is good business. Make your business stand out with a professional sign from DS Signs and Graphics. Successful companies all over the Carolinas are trusting Alex at DS Signs and Graphics. He has the artistic ability to present your company's image in the best light. Not only display signs, but DS Signs and Graphics can customize banners of all sizes. And if you need magnetic signs or window and vehicle lettering, call on DS Signs and Graphics today. They offer a full line of signs and graphics for any event. 3D, sandblasted, storefront, and monument signs are part of the complete selection of quality signage. Professional signs and banners to fit any budget. Let your business stand out. Call DS Signs and Graphics today. That phone number is 286-4900. Or stop by the sign shop located on Main Street in downtown Spindale. And check the website for more suggestions at dssignsandgraphics.com.
I want to tell you about a little-known Rutherford County gem, Integrity Marble and Granite, located at 287 Shiloh Road in Forest City. They are the premier stone fabrication company in the western North Carolina region. They specialize in granite, marble, and natural stone, offering complete design and installation. Their design center and Kohler showroom features vanities, decorative accessories, bathroom, and kitchen fixtures. You do not have to go to Charlotte or Asheville for this kind of quality. We have it right here in Forest City. Stop in their showroom and browse their beautiful displays, or you can call 828-247-8801 for a free quote. You can also go to their website, www.integritymarblegranite.com, and look at the pictures and see samples of their available materials. Now, mention you heard it on Gilbert Talks Taxes, and they will give you $100 off any sink purchase. That's Integrity Marble and Granite. Okay, we are back this April 2nd day, and it's 58 degrees outside. Welcome back to Gilbert Talks Taxes. It's a beautiful morning. If you haven't been out yet, just stick your head out the window. It's unbelievable. Some of my farmers that have been coming in to get their tax returns done, have said, because I've talked to them about planting, trying to get a hold of what kind of flowers to put in my bed this year, and they're saying, oh no, it's too early. We could still have a frost. Please do not tell my dogwoods that. They are in full bloom, and they look beautiful. This is the azaleas also. It's been a wonderful spring. So I said I was going to talk about Obamacare, and one last thing about Obamacare, and I'm pulling up the email. Todd and I are enjoying our oatmeal cranberry cookies, the official cookie of Gilbert Talks Taxes, here in the studio this morning. So CBO, the Congressional Budget Office. Now, these boys are very good at what they do. They are number crunchers extraordinaire. When they tell Congress that a law is going to cost this much, they are usually extremely accurate. So I say that to set this up. And now let me talk about this other thing with Obamacare. I said it was going to be one thing, Todd. It's already two. Okay, so if your refund is being held, I've had a number of these, being held up because you have Obamacare and you did not get a 1095A. Now, if you go to the healthcare.gov, or if you call the 800 number, and I'm going to give you that 800 number right now. Let me give it to you first. I'll give it to you again. But healthcare.gov, Obamacare, the official marketplace telephone number, whatever you want to call it, is 1-800-318-2596. And the website is healthcare.gov. The problem that I'm seeing with my clients, and again, I just talk about what I see and what I do. I hear a lot of things, but what I'm seeing with my clients is I've got a small group that did not know they even had Obamacare. They knew they went to an insurance agent, and the insurance agent went through the marketplace for them and got them insurance. Now, they knew they were getting a subsidy that the government was helping them pay for their health care. Now, and again, this is what they're telling me, that they didn't know. And they may know. I don't know what they know. But I tend to believe them, because I get that deer in the headlights look when I ask them, do you have Obamacare? No, I have Blue Cross Blue Shield, or whatever other policy they have. Well, where did you get it? From my insurance agent. Where did he get it? They don't know. And it turns out that they had Obamacare. Well, and so the question I ask is, did you get a subsidy? Again, they don't know because the insurance agent's not educating them. The commissions on these policies have gotten so small. Now, I've heard this from an insurance agent. If insurance agents that are out there listening, if this is wrong, please correct me. Give me a call, 828-289-9300. Send me an email, gilberttalkstaxes.com, or you can just email questions@gilberttalkstaxes.com. Send me an email. What I'm being told is that the commissions are so small, they almost don't want to spend the time. So you want a healthcare policy? Here it is. These are your options. ABC, silver, what is it? Pewter, gold, platinum, whatever, brass, tin, lead, whatever plan. Here's your plan, and it's this much, and the government's paying some of it. And the people go okay, or they say no, or whatever. So a lot of them don't know. So we do the tax return. I ask them, did you have insurance? Oh yes, Blue Cross Blue Shield. How do you get it private? Private, I pay for it. And then they get a letter from the IRS saying we are holding your refund because we need a 1095A. Our records indicate a 1095A. So they never got a 1095A in the mail. So I called that 800 number yesterday for one of my clients. I've actually had to call the number 3 times this week for my clients. And I found the people working there were actually quite pleasant. At least the ones I've talked to were quite pleasant. They understood. The lady yesterday told me a lot of people have not gotten these 1095s. And I asked her, I said, why? She said, I really don't know. I'm here at the call center answering calls. She said, I hear a lot of things, but they were supposed to have been mailed out January 31st, first week of February. So if you haven't gotten one by now, you probably aren't going to get one. Now, you're supposed to be able to log on to your website, you're supposed to be able to log on at healthcare.gov. Again, there's a lot of fraud sites out there. Don't go to anything but healthcare.gov. If you go to healthcare.com and you put your information in, you will be hacked. And you don't need your social security number, you don't need your date of birth, you don't need any of that if you already have an account set up. You just need your password, your user ID and your password. Now, the 3 phone calls I had to make because these taxpayers didn't even know. Well, let me take that back. The one did know, but the other 2 didn't even know what they had. I have insurance. That's all they know. So we call them. Now, they've done it for me 3 times. They will let me fill out a blank 1095A. They'll give me the information over the phone. They can't email it to me. They can't fax it to me. They can mail it to your address. I did one of these about 3 weeks ago, and she hasn't called me, so I don't know, but she hasn't called me that she's gotten it yet. So that route is definitely going to take a long time. Can you file an extension based on this? Yes, you can. But don't forget, filing an extension is not an extension to pay. If you owe money, it is due April 18th. You have to make a reasonable estimate. And the IRS said, if you're not sure, send more. We'll refund you the difference. So, and that's their take on the thing. They're not budging. So they're not going to give you a break. They're not going to extend it because you didn't get your 1095A. That's your responsibility as an adult in this country to know what kind of insurance you have. But again, they haven't made it easy to know what kind of insurance you have. But I called that number. Let me give you that number again. 1-800-318-2596. And it's supposed to be a 24/7 number. I've only called it during business hours. The whole time was about 20 minutes. One time, the whole time was only about 10 minutes. So, like I said, I've done it 3 times this week. I did it a few times. I've done it a few times this tax season, but this week I kind of had a run of it, a run of them, I guess you would say. So if you can log on, however, if you created your account yourself at healthcare.gov and you can log on and you can go to the portal, your 1095A is there. And you can download it, and I can move on with your tax return, and there's no problem. But if you don't know how to log on, and you can't get on, and you didn't do it, your agent did it, and then you call your agent, and he doesn't know because he doesn't remember because you've had your insurance for over a year, and he doesn't even. I had one where he didn't even remember who the lady was. Anyway, so you can call them, and if you have a blank 1095A, which you can get it off the internet, they will give you the numbers and have you put them in the little boxes yourself. Now they'll read you a disclaimer saying this is for information only. You're not supposed to use this to file a tax return. You're not supposed to use this to do blah, blah, blah. And she goes through this whole disclaimer. It takes about a minute, and make sure you understand all that. And then she'll give you the information. And the information is the start date, termination dates, who's insured, and how much your subsidy was. Because that's the issue. The issue is, did you receive too much of a subsidy, or did you not get enough of a subsidy? If you received too much of a subsidy, you will have to pay it back. If you did not receive enough of a subsidy, they will give you a credit. So this is crucial information. I've had people that have had to pay back as much as $7,000. Their insurance agent did not know what he was doing, way over subsidized a person that was 500% over poverty level, got them a full subsidy, which the program will do what you put in, Todd. If I put in that you only made $15,000 or whatever, and you're a social security recipient, you'll get a subsidy. The government will pay that. But there is a day of reckoning, and in this case, the reckoning happens when we do the tax return. So let me get back to the, I've got to get this up here. Let me get back to that. Okay, so I've said that. Oh, the last thing I want to say about that is, the last statistic I heard, 71% of people that have a subsidy are having to pay it back. Originally, they were estimating it was going to be 50-50. 50% would pay some back, 50% would get more money. But now the statistic that we're in it, and we're in the middle of tax season, we're at the end of tax season, the regular season, what they're finding is it's about 71% of the people, because they are not calling healthcare.gov, they're not going online, and when they make more money or they get another job or they have something like that happen, they take money out of an IRA, anything that's going to increase your income, you're supposed to report it, and your subsidy is supposed to be adjusted. Well, nobody's doing that. They're budgeting it. This is what I pay every month, and that's it, and they move on. So that's what they're saying is the problem. Okay, but now CBO, Congressional Budget Office, has now done an analysis, a report, and they said Obamacare missed its projection. They projected how many people would be covered. Remember, this was going to be every American was going to have coverage. Everybody, no matter whatever, you are going to have coverage. And as we all know, that has not been the case. So they're saying that they missed their estimate by 24 million people. So there are 24 million people who do not have insurance. But what's worse than that is that they're saying that, and this is quite a long story, it's on the Weekly Standard, it's on their website. The story came out March 28th. I believe Congressional Budget Office issued the report on the 26th or the 27th of March, and it took everybody a few days to read through it and see what it actually has, and it gives a lot of numbers of what's what and who's got private, who's got Medicaid, who's actually got exchange. But the bottom line, after you read this story, is that they're estimating that whereas Obamacare was supposed to insure 201 million people, it's actually only insuring 177 million people. And this, by the way, is plus or minus a million, Todd. A million here and a million there. Yeah. Pretty soon you're talking about real people. So it's missed 24 million people. But what actually, the shocking thing about it is that they're estimating that it's actually less people have insurance now than would have if Obamacare hadn't gotten put into place, if Obamacare hadn't done anything. They're saying that at least 34 million, there are 34 million less people insured. In the absence of Obamacare, if there was no Obamacare, they're saying that a minimum of 186 million people would have private insurance right now versus 177. That's 9 million people less. That's 9 million. That's like a country. I mean, that's a state. To put that in perspective, Chicago has 9 million people. So I mean, to try to get your hands around what that means, that's a lot of people. And they refuse to call the thing a failure yet. So what they did is they just moved the goalpost, move it up about 10 yards, and they've just redesigned all the parameters, and they're actually calling it a success. And I don't understand the math yet, but they just refuse to give up on this thing, even though we've got people whose tax refunds are being held. Tax refunds that were filed January 31st still haven't gotten their money because there's a holdover from the subsidy. I did say it was just going to be one thing, right, Todd? How many things has it been? You lost count of how many things it's been? So can I get one more thing in there? Okay, let's take a break. We come back. If you're selling a house, now this is crucial information because there's a lot of confusion about this. You're selling a house, you're selling really any kind of property. You need to listen to this next section. Gilbert Talks Taxes right here, WCAB 590 AM.
Suffering from numbness in your feet, leg cramping, pain when you walk, difficulty sleeping from leg and foot discomfort? Well, you need to see Dr. Jerry Gross at Foot and Ankle Center of the Carolinas. Your feet don't have to hurt. Call 245-6405 today.
People say to me all the time, Gilbert, your hair looks fabulous. How do you do it? The answer is simple. Robin Saunders at RSL Salon, 279 Shiloh Road in Forest City. Now, anyone that can make you look this fabulous is only available by appointment. So you've got to call Robin at 289-9110 and tell her you want to look as fabulous as Gilbert. RSL Salon also does gel nails. If you need a pedicure, shellac, or gel nails, call Emily at 447-3524 and she will fix you right up. That is RSL Salon at 279 Shiloh Road in Forest City. You can call Robin at 289-9110 or Emily at 447-3524 because everyone deserves to look fabulous.
What can I say about Cafe at the Mall, Cafe to Go, and 10 North Trade Cafe Bakery that can do them justice? The cakes, fresh baked breads, sandwiches, and salads, everything is delicious and perfect. Whether it's sit-down dining, lunch on the run, or catering for any occasion, Cafe at the Mall, Cafe to Go, or 10 North Trade Cafe Bakery is the place to go. Stop in at Cafe at the Mall, Cafe to Go, and 10 North Trade Cafe Bakery and mention Gilbert Talks Taxes and get a free cranberry oatmeal cookie, the official cookie of Gilbert Talks Taxes.
We are back, Gilbert Talks Taxes, this April 2nd, 2016. You can call me at 828-289-9300. If you have any questions, call me this week, send me an email. I'll answer questions if you've gotten a letter from the IRS you don't understand or local taxing authority. I've actually had a few come to me this week with letters from North Carolina going back to 2011, 2012. And no, there is no statute of limitations. They can go back wherever they find an issue. Now, the IRS won't go back more than 3 years, but North Carolina really surprised me. They're digging back into the archives, and none of them made any sense. We were able to resolve them all. I was actually able to resolve one of them with just a phone call, but it's a little shocking. But I focus mostly on federal taxation because that's where the money is. Who was that? Who was the man? They asked him, why do you rob banks? And he said, because that's where the money is. That's why. So everybody goes after the IRS because they're the ones that give you credits. Usually it's earned income tax credit. That's the big one that everybody gets, every American with children that's below certain income levels gets, or the child tax credit. If you're below a certain income tax bracket, a certain income, you get those two credits, and that those are credits. Which there's a confusion. There's a credit and there's a deduction of tax. A credit actually is what puts money in your pocket. A reduction of tax reduces your tax, and once you get to zero, there's no more tax. So that's the difference. Where standard deduction is just that, a deduction. It reduces your tax down to zero. Once you get into a negative number, which the software will do that, you can actually have a negative, your taxable income is a negative $4,000. Well, that doesn't mean the IRS is going to turn around and pay you some tax. No, it just means you don't owe them any more tax. Now, credits, we have, and there's other credits. There's the college credit, the lifetime and the hope credit, and then there's some other minor credits that, listen, it all adds up. I don't want to call any credit minor. They're smaller, easier to calculate. But the earned income tax credit, child tax credit, those are the big ones. So we tend to focus on the federal government because that's it, and it's also the biggest chunk of our tax, because you can actually live in one of the 10 states that has no state income tax. And we've actually got Florida, Tennessee. I have a lot of clients in Texas. Just because of some business dealings I've had in Texas, I actually have quite a few there. Those 3 states have no state income tax. Now, they do have higher rates at other things. They get their money somehow. So, it's not that it's a free state to live in. But with a little tax planning, it really goes a long way. North Carolina used to have bigger credits. 2 years ago, they went to a flat tax, 5.7% of your taxable income. Now, they do have a generous standard deduction, and they have some things and some other things for being over 65 and so on. But they're still at state tax, and they've surprised me. So if you get a letter, bring it to me. Now, I promised I was going to talk about if you sell your house, and I want to give some research credit here. Some of this information I'm going to share with you came from the tax girl, Kelly Phillips Erb, JD. She's a lawyer. She's a specialist in taxation. I really admire her work. I read it quite often. She's got blogs. She writes for Forbes. She's a go-get-em mother of I don't know how many children, and full-time mom, full-time businesswoman, full-time lawyer, and I get a lot of information from her. Her information is very well researched, so you can look her up, the tax girl, Kelly Phillips Erb. So if you sell your house, the reason I think there's a lot of confusion is there was a law in 1979. I'm sorry, I'm not sure when it started, 1980, but anyway, there was a law that they did away with this law in 1997, May of 97 to be exact. What the law said a lot of things. It was called the Taxpayer Relief Act of 97, and now that law's been the Taxpayer Relief Act of 97 changed a lot of what was in these laws. So a lot of this stuff is still around because people are selling homes now that they bought back then, and they just don't think that anything's changed. Friends, a lot has changed. A lot has changed. So if you sell your primary, let me give you the bare bones, Todd. You're going to sell the house. You are married. You file a married filing joint tax return. Okay, when you sell your house, up until 2007, everybody that sold the house pretty much had a gain. I mean, you made money on your real estate unless you absolutely bought it under some horrible terms. And being upside down or underwater was, back in the 90s and the early 2000s, was kind of unheard of. That's when people were flipping homes and people were buying a house, selling it in a year and doubling their money, which those days are over. Unless you really get an incredible deal on a house and a lot of things happen. Donald Trump becomes your next door neighbor, you're not going to double your money. People are fortunate today to break even. So a lot of this thinking goes back to then, when people were doubling their money on their homes. Well, they're not now. But if you bought your house for what, Todd? Let's just keep it simple. You bought it for $150,000. Okay. Now you want to sell it. You sell it for more than $150,000. You have a capital gain. Plain and simple. A gain is a gain is a gain, and that's what you call it, a gain. It's not anything else. If you sold it for $1 more, or $50,000 more, or $100,000 more, it's a gain. You are excluded. This is the law today, the way it stands. Husband and wife, married filing jointly, you are excluded on the sale of your primary residence. What is your primary residence? The house you live in 2 years out of 5. Why that rule, I don't know. But you got to live in this house at least 2 years out of the last 5. Did I say that, the last 5? 2 years out of the last 5. You have to have lived in the house. It had to have been your primary residence. It's not your beach house down at Hilton Head. It's not your mountain house up in Asheville. It is your primary residence that you lived at, you domiciled at. 2 years out of 5. It's that simple. So that house, you sell that house, you're excluded for up to $500,000, married filing jointly. If you're single, $250,000. So that $150,000 house, you can sell it for up to $400,000 if you're single and not pay capital gains tax. It's the exclusion. It's in the Taxpayer Relief Act of 97. $500,000 married filing jointly. Now I know in this market here, unless we're dealing with equestrian property in hunting country or some of the large land tracts up Sunshine, Bostic, up towards that way where you have some $1 million plus properties being sold, the average homeowner in Rutherford Polk, where most of my clients are, Cleveland, I've got a lot of clients in Cleveland, Buncombe, in this area, most of them are not going to have an issue with this, because you're talking about, if you bought a house for $200,000 20 years ago, you would have to sell it married filing jointly. You'd have to sell it for $700,000 for you to have a problem, and it's just not happening in this market. It's actually not happening in a lot of markets. As a matter of fact, unless you're in a big city market, that kind of gain's just not happening today. But maybe you have it. Maybe you've inherited this property and your cost basis is so low. That's another word I want to teach you, cost basis. What is your cost basis in your house is what you bought that house for, plus all your capital improvements you've made to the house up to and including the date of sale, which includes your closing costs. So let's say you're selling that property. Todd, I want to buy that palatial estate of yours, and that you're selling for $500,000. But Todd, I need you to help me get a loan from the bank. I need you to kick me back $10,000. That is part of your basis. Your closing costs is part of your basis in that house. And there's some rules there. I'm speaking very broad-based here. You know, there are some different things, and a good tax person or your attorney at closing can help you with all this. So what's important here is you got to keep your records of that house, but you are excluded from capital gains. So there's a rumor going around that you have to, or not a rumor, I've had clients that think, I've got capital gain on my house. No, you don't. Or yes, you do. You have capital gain, but is it taxable? No, it's not. $500,000. You're excluded up to $500,000. The second thing, and part two, which kind of goes along with that, is the exclusion, you have to be 55 years of age or over to claim this exclusion. Again, that goes back to that law that was changed in 97. It used to be that you could only claim this exclusion if you were 55 years old. That was in effect to help seniors. We had a wave back then of early pre-baby boomers, and there was senior housing. There were some issues. They were trying to help people out, so they kind of created that, and that was only limited to $125,000, and once in a lifetime. I remember those. I remember doing some tax returns with those. But that's done away with. Your age doesn't matter anymore. And again, the exclusion is 250 single, 500,000 married. You can't claim capital gains exclusion. This is what a myth that's I've had people tell me. You can't claim capital gains exclusions unless you invest the proceeds from your house into the purchase of a new house. Again, that's that law back from 97 that under the old law, if you bought your house, and I actually had a lady in 2003, I think it was 3 or 4, convinced she had sold a house, had moved here to retire, and was adamant she had to take that money that was sitting in a bank account, she couldn't touch it, she had to take it and buy another house or she would pay taxes. And I tried to tell her, no, that's not the rules anymore, but she was emphatic that it was the law, and I believe she did it. It was called the rollover rule. They did away with that in 97. What you do with that money is your money, and you can do whatever you want with it. You can buy another house, you can keep it, you can whatever. It's your money. That rule, they did away with that rule. And again, that was to help stimulate the economy. There was a lot of things going on back then, and it was a bad idea. Talk about taxation. It was just a bad idea. It was really pointless. The reason people are selling their homes is to get out of them because they're going into something else. They don't need to be buying another one. And there was another one, I believe there were rules there. It had to be similar. Why would you do that? People say you can claim the exclusion on any number of homes. I just hit that. No. If that was the case, this would be a credit for home investors. It's not a credit for home investors. It is to help homeowners when they sell their house not to have to pay capital gains tax. Now, that you can. Then there's this another thing, and this gets a little complicated. And I don't know. Whoever started this thing, this has to be one of those internet lies. Whoever started this, but I've heard it that when you have capital gains, and you can wipe capital gains out against capital losses. Let's say you sell stock and you lose money. You sell land and you make money. Land meaning investment land, not your primary residence, and you make money. You can wash those out against each other. The software does it on the tax return. A capital loss and a capital gain will wash each other out. You'll either have a capital loss to carry forward into next year, or you'll have a capital gain that you got to pay taxes on. That does not matter with your primary house. You're not stuck with that capital gain. You're excluded. Now, if you're over your $500,000, you've got to pay that capital gain, and some of that will wash out if you have some other capital losses. But that, again, I'm not seeing that in this market, and I wouldn't plan on that. Now, you can deduct the cost of painting, improvements to your home, and you can do all this stuff and get a deduction on your taxes. No, it's all that does is it increases your basis. You don't deduct. People bring me all these receipts and all this stuff. They went to sell their house, and the buyer came back with a laundry list. We've all had this when we've sold the house. I want you to fix this, fix that, replace this, paint this. You can say yes or no to some of it, none of it. You can just tell them no, it's as is, or you can do it all. I've had people do it all. If it's a big enough property and it's a big enough sale, you'll do $20,000, $30,000 worth of work to get that house sold. And they do, and they have. With that, you don't write that off on your taxes. There's nowhere to write that off. What that does is it reduces your basis. If you're pushing that $500,000 and you think you may owe, every penny counts because it's a reduction of basis. Now, Obamacare. I'm not going to talk about Obamacare, but there's this thinking, and I remember when this rumor started, and I think I even said this. I'm not sure. I'd have to go back. Obamacare puts a 3.8% tax on the sale of all real estate. No, it does not. The Medicare tax of 3.8% is imposed on investment and unearned income of high-income taxpayers. High-income taxpayers, individuals with income over $200,000, Married filing jointly, it's $250,000. With over investments include income gain from sale of a house, but it's only beyond that exclusion. So there is the 3.8%, but it's on all gain, whether it's from your house or from any other thing. But if it's from your house, it's got to be above that 500,000, 250, 500,000 exclusion. And then the 3.8% tax is only on the amount above the 500,000. So, and this seems like a minor detail, but when you're doing these taxes, and I'm calculating these taxes, these things are huge. It's, the devil's in the details, and it's a big detail. And the last one, I don't know why everybody that moves brings me every receipt from their move. Okay? The rumor is, people tell me moving expenses are deductible. That'd be great if it was. That really would be wonderful, but it's not. The only time moving expenses are deductible is when it's work related. You've been moved. That's the only time that you can do it, and even then, there are some pretty strict rules. And there's a whole worksheet. If you come to my office and tell me, I just moved into the county, my business moved me here, or I'm moving out of the county, my business is moving me to Texas. That's why I have a lot of people in Texas, because one of the businesses here relocated out there and took a lot of people, and I still do their taxes. And I'm grateful that they stay in touch with me and keep doing that. But now theirs were deductible because they were moved. And did the company pay for some of it? I mean, there's a laundry list of issues. But no, don't bring me your moving receipts when you moved, from Shiloh to downtown Forest City. That is not, number one, it's not far enough. And number two, just because you wanted to move because the rent is cheaper, that does not count. So some of these I can really get in depth with. If you've got an issue, if you've sold a house, you're selling a house, and you want to do a little pre-closing tax planning, you've got questions, please give me a call, 828-289-9300. The last one, that's the big one that people think is, especially now, well, I lost money on my house. I have one right now. The lady built a house in 1993. Built a house, an equestrian estate with a barn and a beautiful facility. Built it from the ground up, $1.4 million. She's got in the ground. She just sold it for $800,000 and was glad to get it because nothing is selling. She's lowered the price so many times. You go to Zillow and it looks like it's every year the price comes down. At one point she was asking $1.7 million, and she might have gotten it. She might have gotten it in 2003, but you're not going to get it in 2015, which is when she sold it. So can you claim that loss? Unfortunately, no. It's primary residence. It's not investment property. It is a capital loss that does nothing for you. In her case, she's glad to get out from under it. Let's take a break. Todd, I went over my break. This is Gilbert Talks Too Much. Let's take a break. WCAB 590, this is Gilbert Talks Taxes.
Hi there, this is Kimberly, and I'm here to tell you about Peterson's Auto Service and Detail Shop. As a woman, I'm often apprehensive about taking my car to a dirty service garage. But you can be assured that Peterson's, located at 478 Butler Road, Forest City, has an incredibly clean and safe environment where you get high-quality service at a great price. Peterson's was voted Rutherford County's best auto service 3 years in a row. So take your car to Peterson's for brakes, oil change, North Carolina inspection, tire rotation, headlight lens restoration, scratch removal, and meticulous auto detailing. That's Peterson's at 478 Butler Road, Forest City. You can call him for an appointment at 245-8889. Mention you heard Kimberly on WCAB 590 AM, and Peterson will give you $20 off a full detail or $5 off your next North Carolina inspection. Peterson's Auto Service and Detail Shop, a place I feel comfortable going to.
My closet keeps shrinking my clothes. And if you have that problem, take them to Nancy at Nancy's Alteration Shop at 610 South Broadway, Forest City. Call Nancy at 248-2345. Wear the clothes you like to wear. Let Nancy bring them back to life for you. That's Nancy's Alteration Shop, 610 South Broadway, Forest City.
I want to welcome Tim Schlabach and Foothills Photo Works, a professional hybrid commercial photography studio. If you're concerned about your social media image, listen up. Whether you're an executive, real estate broker, lawyer, or business owner, your image matters now more than ever. And you know first impressions count. Whether you need professional portraits, corporate headshots, images of your products or facility, aerial photography, and videos of buildings, boats, or large acreage, affordable professional help is here for you. Foothills Photo Works can create media that will help your prospects get to know you better and help you look your best. Foothills Photo Works is located at 362 Charlotte Road in Rutherfordton, North Carolina, but you need to call for an appointment. That number is 828-668-2304. Mention this ad and receive 15% off your first session. That's 828-668-2304. Foothills Photo Works, your media professionals.
Welcome back to Gilbert Talks Taxes right here on WCAB 590 AM this April 2nd. And, Todd, where does the time go? I can see why those guys do a 3-hour show. You need a 3-hour show to get it, to answer the emails, to answer the questions. It's just, I'm just scratching the surface of, look at the stack of things I wanted to talk about. And I think I've got to 2 of them, maybe 3 of them. Now, last week, I had made a comment, and a lady called and said, I had made a comment about, I actually shared a couple of Bible stories in my speaking about what was going on that day, and a lady called in and said, what was that Bible story? And after that, I spoke about Nehemiah, because I'd talked about that, but what she was referring to, went back and listened to it, what she was referring to was when I was talking about, there was the terrorist attack of Brussels, and I said, these Islamics, ISIS, whatever you want to call them, Muslims, I mean, pick a title, Middle Eastern descendants, are the children of Ishmael. They'll tell you they're the children of Ishmael. Go back and read it in the Bible, because God proclaims what's going to happen to them. I've said this before. This is a 5,000-year-old family feud that the whole world just happens to be in the middle of. Between the children of Abraham, between Ishmael and Isaac. So what I was referring to, the story, I said go back and read it. It's in Genesis 16, where Ishmael's born to Hagar, how would you pronounce that? I've heard it pronounced several ways. Hagar has a child. Abraham names him Ishmael. Then Sarah mistreats Hagar, and her and Ishmael go into the desert to die. And the angel of the Lord appears to her, and read the story. Read the story and tell me what you think, because it's really, he is a child of Abraham, and part of the promise does go to him. So read it. But that's what I was referring to. The lady said, what story was that? And I'm sorry, but I thought at that time I was talking about Nehemiah, and I kind of went to that. And it was right after, that's Genesis 16, Genesis 15 is when God makes his covenant with Abraham. And he didn't believe it. Sarah didn't believe it because she was old and had never had a child. And he said, oh no, I'm God. And I said this is going to happen, and it's going to happen. So read that. Read that. It's really, it gives you an anchor about what's happening. We've got 30 seconds left. It gives you an anchor about what's happening. So that ends today. Tax season has just 16 more days left, 18th. I will be here 2 more Saturdays. We've decided to make the 16th our last day. Thank you, everyone, for listening. This is Gilbert Talks Taxes right here, WCAB 590 AM.
Welcome to the open house and Fan Appreciation Day with the Forest City Owls, Saturday, April 2nd from 1 until 3 at McNair Field. Come meet the new owner and front office staff. Enjoy free hot dogs and drinks, free giveaways from the Forest City Owls. Single game tickets will be on sale. There'll be a hit, run, and throw events on the field. So bring the family and plan for a fun 2 hours. Learn about all the special events planned at McNair Field this year, including the Charlie Daniels concert. WCAB will be there broadcasting live from 1 until 3. That's Saturday, April 2nd, McNair Field, as we welcome a summer of Forest City Owls baseball. Folks, I'm happy to announce to you that Quick Lots half-price bargain store is back in town and open at the Tri-City Mall. After some restructuring, Quick Lots half-price bargain store is now specializing in name-brand small appliances and high-end toys and many other items at Quick Lots discount prices. Vacuums, coffee makers, humidifiers, microwaves, and so much more. And coming soon, a new electronics department featuring laptops, cell phones, computers, and more. Check out the Curiosity Center. Be great for students and collectors. Insects enclosed in glass. There's a frog, tarantula, butterfly, and a whole lot more. If you sell online or the flea market, you can buy in bulk at Quick Lots and make yourself a lot of money, and Samuel can give you instructions on how to make it more profitable. It's worth a stroll through. Open Monday through Saturday, 10 o'clock until 6 o'clock. Quick Lots half-price bargain store in the Tri-City Mall.
We can't rule out a passing sprinkler shower early today. After that, we'll see increasing sunshine. It should be breezy, cooler, and less humid for the afternoon. Highs will reach about 64 to 69. Overnight tonight, mostly clear. We'll have a stiff west to northwest wind. Fairly cold with lows dropping into the mid-30s to around 40. And we'll see lots of sunshine and little, if anything, in the way of clouds on Sunday. Should be breezy and cool to close out the weekend. Highs in the upper 50s to low 60s. I'm meteorologist